हेलो दोस्तों, बिगनर्स पॉइंट में आपका स्वागत है। और अभी हम कर रहे हैं इकोनॉमी। चैप्टर नंबर 5 चालू स्टार्ट करेंगे। फोर्थ तक कर लिया है। गवर्नमेंट बजट एंड द इकोनॉमी इस चैप्टर का होगा हमारा नाम। We introduced the government in Chapter 1 as denoting the state. We stated that apart from the private sector, there is a government which plays a very important role. An economy in which there is both the private sector and the government is known as a mixed economy. There are many ways in which the government influences economic life. In this chapter, we will limit ourselves to the functions which are carried on through the government budget. This chapter proceeds as follows. In section 5.1, we present the components of government budget to bring out the sources of government revenues and avenues of government spending. In section 5.2, we discuss the topic of balanced surplus or deficit budget to account for the difference between expenditures and revenue collections. It specifically deals with the meaning of different kinds of budget deficits, their implications, and the measures to contain them. Box 5.1 deals with fiscal policy and a simple description of the multiplier. The role the government plays has implications for its deficits, which further affect its debt, what the government owes. The chapter concludes with an analysis of the debt issue. Government budget meaning and its component. There is a constitutional requirement in India Article 112 to present before the Parliament a statement of estimated receipts and expenditure of the government in respect of every financial year which runs from 1 April to 31 March. This annual financial statement constitutes the main budget document of the government. Although the budget document relates to the receipts and expenditure of the government for a particular financial year, the impact of it will be there in subsequent years. There is a need, therefore, to have two accounts. Those that relate to the current financial year only are included in the revenue account, also called revenue budget, and those that concern the assets and liabilities of the government into the capital account, also called capital budget. In order to understand the accounts, it is important to first understand the objectives of the government budget. Objectives of government budget. The government plays a very important role in increasing the welfare of the people. In order to do that, the government intervenes in the economy in following ways. Allocation function of government budget. Government provides certain goods and services which cannot be provided by the market mechanism, that is by exchange between the individual consumers and producers. Example of such goods are national defense, roads, and government administration, etc., which are referred to as public goods. To understand why people goods need to be provided by the government, we must understand the difference between private goods such as clothes, cars, food items, etc., and public goods. There are two major differences. One, the benefits of public goods are available to all and are not only restricted to one particular consumer. For example, if a person eats a chocolate or wears a shirt, these will not be available to others. It is said that this person's consumption stands in rival relationship to the consumption of others. However, if we consider a public park or measures to reduce air pollution, the benefits will be available to all. One person's consumption of a good does not reduce the amount available for consumption for others, and so several people can enjoy the benefits. That is, the consumption of many people is not rivalrous. 2. In case of private goods, and anyone who does not pay for the goods can be excluded from enjoying its benefits. If you do not buy a ticket, you will not be allowed to watch a movie at a local cinema hall. However, in case of public goods, there is no feasible way to excluding anyone from enjoying the benefits of the good. That is why public goods are called non-excludable. Even if some users do not pay, it is difficult and sometimes impossible to collect fees for the public good. These non-paying users are known as free riders. Consumers will not voluntarily pay for what they can get for free and for which there is no exclusive title to the property being enjoyed. The link between the producer and consumer, which occurs through the payment process, is broken, and the government must step in to provide for such goods. There is, however, a difference between public provision and public protection. Public provision means that they are financed through the budget and can be used without any direct payment. Public goods may be produced by the government or the private sector. When goods are produced directly by the government, it is called public protection. Redistribution function of government budget. From chapter 2, we know that the total national income of the country goes to either the private sector, that is, firms and households known as private income, or the government known as public income. Out of private income, what finally reach the households is known as personal income, and the amount that can be spent is the personal disposal income. The government sector affects the personal disposal income of households by making transfers and collecting taxes. It is through this that the government can change the disruption of income and bring about a distribution that is considered fair by society. This is redistribution function. क्या बोल देंगे इसको? Redistribution function. Stabilization function of government budget. The government may need to correct fluctuations in income and employment. The overall level of employment and prices in the economy depends upon the level of aggregate demand, which depends on the spending decisions of millions of private economic agents apart from the government. These decisions in turn depend on many factors such as income and credit availability. In any period, the level of demand may not be sufficient for a full utilization of labor and other resources of the country. Since wages and prices do not fall below a level, employment cannot be brought back to the earlier level automatically. The government needs to intervene to raise the aggregate demand. On the other hand, there may be times when demand exceeds available output under conditions of high employment and thus may give rise to inflation. In such situations, restrictive conditions may be needed to reduce demand. The intervention of the government, whether the expand demand or reduce it, constitutes the stabilization function. Classification of receipts. Revenue receipts. Revenue receipts are those receipts that do not lead to a claim on the government. They are therefore termed non-redeemable. They are divided into tax and non-tax revenues. Tax revenues, an important component of revenue receipts, have for long been divided into direct taxes, personal income tax, and firms corporation tax, and indirect tax like excise tax, duties levied on goods produced within the country, customs duties, taxes imposed on goods imported into or exported out of India, and service tax. Other direct tax like wealth tax, gift tax, and estate duty, now abolished, have never brought in large amount of revenue and thus have been referred to as paper tax. The redistribution objective is sought to be achieved through progressive income taxation, in which higher the income, higher is the rate is the tax rates. Firms are taxed on a proportional basis, where the tax rate is a particular proportion of profits. With respect to excise taxes, necessities of life are exempted or taxed at low rates. Comforts and semi-luxuries are moderately taxed, and luxuries, tobacco, and petroleum products are taxed heavily. Non-tax revenue of the central government mainly consists of interest receipts on amount of loans by the central government, dividends and profits on investments made by the government, fees and other receipts for service rendered by the government, cash grants and aid from foreign countries and international organizations are also included. The estimates of revenue receipts take into account the effects of tax proposal made in finance bill. Capital receipts. The government also receives money by way of loans or from the sale of its assets. Loan will have to be returned to the agencies from which they have to be borrowed. Thus they create liability. sale of government assets like sale of share in public sector undertaking PSU, referred referred to as PSU disinvestment, reduce the total amount of financial assets of the government. All those receipts of the government which create liability or reduce financial assets are termed as capital receipts. When government takes fresh loans, it will mean that in future these loans will have to be returned and interest will have to be paid on these loans. Similarly, when government sells an asset, then it means that in future its earnings from that assets will disappear. Thus, these receipts can be debt creating or non-debt creating. गवर्नमेंट बजट दो टाइप के होते हैं, रिवेन्यू और कैपिटल बजट। रिवेन्यू बजट में रेवेन्यू रिसिप्ट्स और रिवेन्यू एक्सपेंडिचर, कैपिटल में कैपिटल रिसिप्ट्स और कैपिटल एक्सपेंडिचर। इसी के साथ टैक्स रिवेन्यू रिसिप्ट्स में टैक्स रिवेन्यू, नॉन टैक्स रिवेन्यू, रिवेन्यू एक्सपेंडिचर में प्लान रिवेन्यू एक्सपेंडिचर और नॉन प्लान रिवेन्यू एक्सपेंडिचर। कैपिटल रिसिप्ट्स में प्लान कैपिटल एक्सपेंडिचर और नॉन कैपिटल प्लान एक्सपेंडिचर, नॉन प्लान कैपिटल एक्सपेंडिचर। क्लासिफिकेशन ऑफ एक्सपेंडिचर। रिवेन्यू एक्सपेंडिचर, revenue expenditure is expenditure incurred for purpose other than the creation of physical or financial assets of the central government. It relates to those expenses incurred for the normal functioning of the government departments and various services. Interest payments on debt incurred by the government and grants given to state governments or other parties, even though some of the grants may be meant for creation of assets. Budget documents classify total expenditure into plan and non-plan expenditure. This is shown in item 6 on table 5.1. Within revenue expenditure, a distinction is made between plan and non-plan. According to this classification, plan revenue expenditure relates to central plans, the 5 year plans। कौन से प्लान्स? 5 year प्लान्स जो होते थे पहले, जो मोदी ने अब आके खत्म कर दिए। एंड सेंट्रल असिस्टेंस फॉर स्टेट एंड यूनियन टेरिटरी प्लान्स। Non-plan expenditure, the more important component of revenue expenditure, covers a vast range of general, economic, and social services. So, social services of the government. The main items of non-plan expenditure are interest payments, defense services, subsidies, salaries, and pensions. Interest payments on market loans, external loans, and from various reserve funds constitute the single largest component of non-plan revenue expenditure. Defense expenditure is committed expenditure in the sense that given the national security concern, there exists little scope for drastic reduction. Subsidies are an important policy instrument which aim at increasing welfare apart from providing implicit subsidies through underpricing of public goods and services like education and health. The government also extends subsidies explicitly on items such as exports, interest on loans, food and fertilizers. The amount of subsidies has a percentage of GDP was 2.02% in 2014-15 and is 1.8% of GDP in 2015-16, 1% in 18-19, 3.6% in 2021, and 1.2% in 2022-23. Now, capital expenditure. Capital expenditure. There are expenditures of the government which result in creation of physical or financial assets or reduction in financial liabilities. This includes expenditure on the acquisition of land, building, machinery, equipment, investment in shares and loans, and advances by the central government to state and union territory governments, PSUs, and other parties. Capital expenditure is also categorized as plan and non-plan in the budget documents. Plan capital expenditure, like its revenue counterpart, relates to central plan and central assistance for state and union territory plans. Non-plan capital expenditure covers various general, social, and economic services provided by the government. The budget is not merely a statement of receipts and expenditures. Since independence, with the launching of the 5 year plans, it has also become a significant national policy statement. The budget, it has been argued, reflects and shapes and is in turn shaped by the country's economic life. Along with the budget, Three policy statements are mandated by the Fiscal Responsibility and Budget Management Act 2003. ये सबसे इम्पोर्टेंट है। FRBMA कब हुआ था? आया था ये 2003 में। The medium-term fiscal policy statement sets a 3-year rolling target for specific fiscal indicators and examine whether revenue expenditure can be financed through revenue receipts on a sustainable basis and how productively capital receipts, including market borrowings, are being utilized. The fiscal policy strategy statement sets the priorities of the government in the fiscal area, examine current policies and justifying any deviation in important fiscal measures. The macroeconomic framework statement assesses the prospects of the economy with respect to the GDP growth rate, fiscal balance of the central government, and external balance. Balanced surplus and deficit budget. अब इसको करेंगे कल।